Hello, everyone. This is Barb Tyson, and I'd like to welcome you to another great Salty Dog webinar. With us today, we have Morgan Wells of Jack Martin Insurance. Boat insurance is certainly another great topic for us. But before we get started, please keep muted and keep your video off as always. Use the chat box that I've opened to ask any questions. And I will be sending out the recording to everyone later today. Now I'm going to hand things over to Alex Helfand, our Salty Dog Education Coordinator.
Hey, thanks, Barb, and welcome everyone. I'm really glad to see we've got quite a few people on today's webinar. I think insurance is probably a topic that's near and dear to any of us who own a boat and tried to get insurance, depending upon whether it's offshore, crossing the Atlantic, or just coastal. And it really changes. And I know I've had some very interesting experiences this last year getting insurance. It wasn't what I expected. And so I've learned a lot, and I hope, and I thought having Morgan come talk to us today would be really relevant, since many of us may be looking for new insurance for this coming season. So if you have questions, please put them in the chat. As Barb mentioned, we will get to all the questions at the end. And I want to remind everyone that, again, we will have a kind of a social session afterwards once we've gotten through, once Morgan's completed his presentation and we've answered all the specific insurance related questions. And lastly, I'll mention it now, we do have an Ask the Expert session coming up on Thursday, and Jamie and Bihan will be coming back to join us. Morgan will be joining us as well, and I believe Gino Morelli will also be joining us, and we may have some folks talking about sales as well. So stand by, we'll have a further announcement about that. And with that, I'm going to turn it over to Morgan and take it away.
Thank you, Alex. Thank you, Barb. Thank you, Salty Dogs. Thank you for all being here this afternoon, and thank you for having me speak today. Again, my name is Morgan Wells, and just a teaser, I'm speaking today from 958 North, 8538 West. I'm on the Pacific Ocean, very close to it. If you figure that one out, let me know later. But I've worked for Jack Martin and Associates, based from Annapolis, Maryland, where I lived for almost my whole adult life. I've worked for Jack Martin and Associates for 31 years. And I've been an independent agent and exclusively dealing with boat and yacht insurance for that entire career, now moving on 31 years. I have a particular expertise in insurance for clients requiring international voyaging insurance. The specialties due to my personal experience sailing and racing yachts basically all over the world. So this afternoon, I'm going to briefly talk about what is going on in the boat and yacht insurance markets, who it's affecting, and what we can do about it, if anything. Simply put, the insurance options are far more limited and much more expensive than just a few years ago. Just in the past year or two, I would say that rates for boats on the US East Coast, so East Coast coastal cruisers, have seen premium rate increases of 20 to 30%. And this is for boats, again, primarily located north of Cape Hatteras or north of the Florida-Georgia border for hurricane season, with much higher rate increases for boats primarily located in Florida, the Bahamas, and the Caribbean, including vessels traveling to and from the Caribbean. We've seen those rates double or even triple, with much higher deductibles. And again, the number of companies available has shrunk dramatically. Again, we see this all as well for boats doing transatlantics and boats in the Med. I've seen rate increases of about the same, but close to 25% in the last year or two generically for boats in the Med. And we can talk about other places in the world too. I want to put a caveat on this, that it's difficult. I work with boats that could be valued, less than $100,000 all the way up to 10 million and more. And that I'm really trying to focus this discussion on Salty Dog members, people like myself and my family and my friends that might have boats, cruising sailboats, multi-hull, monohull, and that are probably in this range of a few to several $100,000. So just bear in mind that, working with many different companies as an independent agent, every company has different ways of doing everything, and it's difficult to talk about the market without that caveat on it, that there could be some significant differences. But for a boat worth, an older boat, say that it's worth 100,000, and a newer boat that is worth several 100,000 or more. At any rate, so over the past few years, we've seen at least nine boat and yacht insurance providers disappear. You may recall just a few years back, Falvey Insurance out of Rhode Island, Pantaenus America out of New York, Brit Global Specialty had a large book of business, Premier Marine, USA, American Reliable, Safe Waters, and I could go on, but you get the idea. A lot of these companies have disappeared, and those remaining companies have made many changes to their underwriting guidelines and their pricing. So we'll come back to that. But let's talk about why. It's a question of simple economics. They're losing money. The perils of the sea are great. A few years back, I think 3 years ago, we were acquired by a larger insurance entity. They left us alone. That's all we do is boat and yacht insurance. But I was speaking with the CEO, who is very skilled in property and casualty insurance, and he was rather amazed at that time that you could insure a $500,000 home for about the same price as a $500,000 boat. And that always just baffled him, as it should us all. Dave McKay, I hope Dave's here today. He wrote an excellent article. He had a history in the aviation insurance industry, and there are many, many parallels between marine and aviation insurance. They share a lot of the same characteristics. And he wrote a great article about how we've evolved and how we're transitioning from a very soft market with lots of insurance companies, lots of players, all looking for our business, to a very hard market. This is not just in terms of pricing or availability, but it's also kind of an underwriting attitude that is very risk off, where the individual underwriters are more inclined to say no rather than yes. So we've transitioned from a market in just the space of, let's say, 2017 until now, from where every underwriter there was all these new companies coming into the market, and they were willing to write premium to write policies at about any premium, and they were somewhat undercutting each other, and they were expanding their policies and giving away coverage. And that was untenable in the long haul because they weren't making money. So we can trace some of this back to Irma and Maria as the trigger. It's not by any means the only reason, but I think that was September of 2017, Irma and Maria, and then 2 years later we had Dorian. But you could look at Irma and Maria as a trigger mechanism. The losses were stunning, and immediately you had Falvey Insurance close their doors within about 30 days. Pantaenus, which was also a Pantaenus America, closed their doors less than 18 months later. So when we look at why this is happening, windstorm losses figure into this primarily, probably as the number one generator of claims for books of business that are in boat and yacht insurance. And it's not just windstorm. We also call this catastrophe losses. It's related, it could be everything from the flooding, the winds, the waves, but these cat losses, catastrophe losses. I was using that word the other day, and one of my clients got confused. He said, "Do you mean multi-hulls?" I said, no. It's catastrophe losses. And insurance companies manage catastrophic reinsurance, if you will. They're buying reinsurance for much of their books of business. And so it's very important to them to know how much business they have right down to the zip code. And I'll come back to that a bit later. So the property and casualty industry as a whole, and boat and yacht insurance as a small part of that, is grappling with this issue of windstorm, how to handle it, and also in the back of their minds, and they consult with risk management consultants, and they're looking at climate change forecasts that affect all coastal areas, right? Which could be the severity of storms, the flooding, and these areas, particularly on the US East Coast and the Caribbean, are where, well, I should say along the US East Coast, are where lots of people live, right? There's large populations and large aggregate exposures to the property and casualty industry, not just boats and yachts, but if you think about a place like Southeast Florida, all those beautiful homes, all those cars, all the people that live there at an elevation of about 5 feet. And you also think of areas along the US seaboard all the way up the coast. And only a few years ago, it used to seem to me that underwriters were only concerned about Florida, Bahamas, Caribbean. And what we've seen is this shift that the entire US East Coast is vulnerable to cat loss, to windstorm risk, okay? Another big component, and I would say the number 2 source of claims to these books of business for boat and yacht insurers is lightning. And I'm speaking more directly to sailboats, of which our crowd is primarily. I would say this is the number 2 claim loss category. As we all know, the NAVCOM systems that existed on boats in 1982 are vastly different than a boat from 2002 and vastly different from a boat from 2022, where we have navigation, communications, climate control, engine systems all integrated. So even a near strike, or God forbid, a direct strike to a sailing vessel generates huge claims. And I've talked to marine electrical contractors. I think that would be a great discussion because I was fascinated by it. You know, when they're hired by an insurance company and an adjuster, and they're looking to get these estimates, so many of them stop and just say, it's really, really hard to know what they're getting into. They don't know the degree of severity, and it may involve partial destruction or removal of parts of the boat to affect the repairs that are required. So lightning claims are, again, number 2. They figure prominently when I talk to underwriters who are very interested. Hey, does this have a carbon spar? Is it aluminum spar? Is it a multi-hull? And I'll give you an extreme example. I had a privileged 745 catamaran. I think they insured it was a new boat, fairly new. It was in Bermuda. It was struck by lightning. It was a carbon spar. And what do we do now? Well, that boat ended up being shipped at the insurance company's expense back to the privileged factory in France at a cost of $180,000. And that total claim, including replacing a new spar, was $1.6 million. So over 25% of the value of the boat, okay? I had a Katana, this is on the other end of it, I had a Katana 47, I want to think it was struck by lightning in Costa Rica. And the first repair estimates were almost the insured value of the vessel. They were about $260,000. All of the boards were going to have to go back to France or be replaced. And it was determined that the best thing for this boat was to be put on a freighter and sent to Fort Lauderdale, where claims could be properly carried out. So lightning is at the top. Those cost of repairs, that's really it leads right into that subject. Another reason we're dealing with rate increases are the cost of repairs. I don't need to tell you if you've been into a marina to get any work done. And I also ask that you remember that when underwriters look at, or an insurance company looks at the cost of claims, the related or ancillary costs of the claims usually far exceed the check you're receiving, less the deductible, if any. They're paying for adjusters and surveyors, perhaps attorneys. They're paying yard charges while the repairs are ongoing. So the list goes on, and so that a $200,000 claim to you can be a far greater number to the insurance company. I'm going to we've talked about windstorm and lightning a bit here, and just want to add that it's very common, and I think most of you would be aware of this, very common to see for boats that are located south of Cape Hatteras and points south in the Atlantic Basin, that there will be a windstorm deductible. It increases from 3% to 5% from the Carolinas into Georgia to as much as 10% or more for boats that are primarily based in Florida, the Bahamas, or the Caribbean Sea. What's interesting over the last few years, we've seen the use with some companies, not universally now, but I wonder if we may see this more, is an increased deductible for claims caused by lightning. Okay, so you just want to be one of those important determinants and something to be aware of, that these are ways that insurance companies are trying to cope with this risk a bit. So they may have a 3 or 5 or 10% deductible that apply to claims caused by lightning. So these deductibles have gone up, our prices have gone up, the cost of repairs have gone up. Coming out of again, to summarize, we're coming out of a very soft market. Insurance companies are very simply economics, they're losing money. So here we are. And I want to add just a couple of other smaller matters which are interesting. I made a note here. When I started my career in boat and yacht insurance, we at John Martin and I were tribunalized as brokers with Lloyd's of London. And Lloyd's of London gave us the pen, the ability to quote and bind certain business. So Lloyd's has always been a major player, was always a major player in boating yacht insurance, particularly for people who are traveling, going transoceanic, trans-Pacific, transatlantic, going to the Caribbean. This is really their market and their expertise. And I worked with many great brokers there over the years. In the last 2 years, the number of syndicates and providers of coverage from the Lloyd's markets has shrunk from about 98 to about 2 and about 0 that want anything to do with US East Coast, US clients, US addresses, US waters. And a lot of this is related to US law and jurisdiction. A lot of this is related to US insurance regulatory environment involving a whole separate area of regulation called surplus lines laws. I won't go into that now, but just bear in mind that as this market has shrunk around us, I had a client ask me just the other day, well, what about Lloyd's? And that's really not a factor. That market has turned its back on the US markets. And what's interesting to me is one of the major players of providers of insurance for most most cruisers that are going to, from, and in the Caribbean Sea has been Concept Special Risks. And they had a long history at Lloyd's and also with Great Lakes out of Munich Re, so they're a European provider catering to the US marketplace, to people like ourselves, right? To the agents and boat owners here in the US. They lost their cover in the fall of 2020. Their underwriters wanted out of the business. They wouldn't do it anymore. They were able to reestablish with an American company called ClearSpring Property and Casualty, A-rated, very good company. So they ended up back in business last February, spent about a year. So that name comes up a lot when we're talking about, particularly for boats on the US East Coast that are going to, from, and staying in the Caribbean Sea for hurricane season. So I just thought that was an interesting point to kind of look at, more of an international sphere outside of the US markets. And finally, remember, the boat and yacht insurance is a relatively small portion of the property and casualty marketplace, the industry. And it's easy for corporate management to cut off or cease operation or take other actions that limit this business. And that's what we've seen in the last few years. So, who is affected by this? Everybody. Although I was talking to a client the other day who has a Nordhaven 68 in Seattle. He's probably the least affected. So West Coast rates, they don't have the incidence of lightning and they don't have named storm. Again, towards the East Coast of the US, as I'm tending to focus here, the coastal sailors of, monohull, multi-hull sailboats that have boats with primary mooring locations or home ports north of Cape Hatteras are without a doubt the least affected. They've seen large price increases, but there's still very good availability in the marketplace. Then there's a break point. I'm going to say for boats that are in the Carolinas and Georgia, the price, it gets a little harder. Not all companies want that business. It's more expensive. And certainly boats that are in Florida, the Bahamas, or the Caribbean Sea as a primary location, that's location for hurricane season. Those are the folks that are seeing rates that have doubled or even tripled in some cases. And they've been the most affected by the changes in the marketplace. I was quoting a boat that was based in Fort Lauderdale. It was just a $360,000 boat. And I almost hesitate to send the quote because the quote is $10,000, okay, for real, right? That's Fort Lauderdale hurricane season. So yeah, these rates are 2.5% or so. So a big challenge there. So another segment of this market that's been greatly affected are older boats. People always ask me why. There's some great old boats out there. The difficulty is finding out which are the really good old boats and those that need a major refit. That I would say that, and this is also interesting, you're all familiar with Geico Boat US. I think it was about 9 months ago that they decided that they would not insure boats over 30 years of age that were over 40 feet. It's a big change for them. And they would not insure boats over 40 years of age, period. When I talk about old boats, I really am thinking in my book for boats that are older than about 1985 or so. The market is just, companies have looked at their loss ratios and it's a segment of the market. Old things break, okay? And it's very difficult for a lot of these companies to have the knowledge and expertise in a willingness to look at some of these risks, and some of these beautiful sailboats that were built back in the 80s and the 70s. Some of them have, very well refit, and they're wonderful, wonderful boats. I would say that the way to address that is if you do have an older boat, and it's, let's say, older than 1985 or so, that you need to have a survey that is at least above average. Okay, so that's how difficult the market is. I have someone understand, well, we don't go beyond age 30, we don't go beyond age, whatever the number is, 30, 35. But if you got one more and you really like the risk, it's a really good survey, above average, send it in and let's see if we can come up with something. So older boats are a challenge. Finally, I would say that the market that is most affected by the availability or the lack thereof of availability and pricing are offshore sailors. And so I'm talking about someone who's, cruising more than a few hundred miles offshore, that is definitely, not just cruising the US East Coast from, Annapolis to Newport or Annapolis up to Maine or up to Nova Scotia. That's all easy, right? It's those that are setting out on a voyage to go Newport, Bermuda, or going Hampton to Antigua. So it's really for people who are doing extended cruising, more than, a few hundred miles offshore. And as you all know, if you're going to Hampton from Antigua, it's 600-800 miles offshore before you, from any land, right? From any land. It's interesting to me that just 3 or 4 years ago, there were more than a half a dozen insurance companies that I could have gone to with risks that were, Caribbean 1500, Salty Dog, or even just individuals sailing their nice, whatever, Hylas 54, via offshore waters to the Caribbean and cruising the Caribbean, at least a half a dozen. And now it's probably 2 or 3. And the pricing there and the requirements for surveys, resumes have changed dramatically. That market has tightened up a lot. A final category, I just thought I'd throw this in. I don't know if we have anyone here that falls into this category or not. But another thing that underwriters have grown increasingly sensitive to are first-time boat owners. And it's not really a problem if someone's buying a 30-foot Wellcraft or something, or buying, a sweet little day sailor or something like that. But when we get into boats that are 40 feet and up, and believe it or not, we have so many requests in the last year or two, particularly with COVID, and where everybody wants to go sailing. What a great thing to do. It's a wonderful thing. And it's great for the industry. But we've seen so many first-time boat owners with little or no experience. And this is a real big challenge in the market. If there is anyone that falls into that category, we can talk more about that later. We still do have markets for it, but it's a challenge. And I'll kind of leave it at that. So that gives you an idea of who's affected, what the market is, who's affected, and now, well, what can we do about it, if anything? Since you're all here, you're already taking a first step. That's to become educated, to know what your options are, learn a little bit more about this. And I'll tell you some of the things that I would recommend and what my advice is. So number one, I think the most important factor that you should consider is to identify and specify a vessel primary location for hurricane season. And when I say, you can't just say Caribbean, or you can't just say north of Cape Hatteras, companies increasingly are looking for a name of marina, or at least a city, state, and zip code. That's hard to do. If we're all cruising sailors, well, how do I say where I'm going to be for hurricane season of 2022 when I'm just planning on cruising New England, or I'm going to be cruising in the Caribbean? But increasingly, and it also relates to this question of companies managing their catastrophic reinsurance, the reinsurance that they purchase is right down to the zip code. And that zip code or that county plays the most important factor in setting the base rate, okay? It's very difficult for a cruising sailor, but I'll give you an example that I run into an awful lot. Someone who's cruising seasonally, yeah, they're gonna be north of Hatteras or north of Florida for hurricane season, but maybe they're coming to Annapolis for the beautiful cruising season, or the Annapolis area, the Chesapeake Bay, for a few months early in the season. And then they're gonna rally or sail on up to New England and up to Maine for a few months, and then come back and maybe catch the boat shows for a few months in the fall, great sailing season again, and head back south, right? So it's certainly conceivable that we could show a location on the Chesapeake Bay, be it Rock Hall or Annapolis or Deltaville or something like that, as the primary vessel location, and identify that as the base for the rating of this boat. So again, to focus on what's difficult, but distilled to this, it really means when they ask for a primary vessel location, that's the place where the vessel is going to be for a majority of that June to November period. So in that illustration I just presented, you might be there for May and June, maybe well into mid-June before you head up to New England, and then you're coming back for September and October on the bay before you head to Hampton or something, right? And that would then, I would suggest that a Chesapeake Bay location, be it Hampton, Rock Hall, Annapolis, wherever you happen to have some ties or would legitimately consider, that's not misrepresentation, but a real thing, maybe is very advantageous. Maybe it's Newport, Rhode Island, or someplace in New England or something like that. And the reason I mention this, what I want you to take away from that discussion is that when we look at primary vessel locations, the Great Lakes are about the least expensive anywhere, followed by the Chesapeake Bay. A primary vessel location on the Chesapeake Bay, rates are about the same. Rates are going to tick up for a boat located in the states in New England, anywhere around Newport, Rhode Island. Yeah, there's windstorm risk, and okay, so the rates are going to tick up. The rates are going to tick up if the boat is going to be primarily located in the Carolinas, such as Oriental, New Bern, something like that. They're going to tick up again if you say Georgia. Brunswick, Georgia is very popular. They're going to tick up another big increment if you say that your primary vessel location is going to be in Florida, the Bahamas, and the Caribbean. So it's this graph all the way from the Great Lakes to the Caribbean, and the delta, the difference in those rates is double and triple, okay? Number two, so that's just identifying a primary vessel location. Number two would be the navigation limit. So that now a vessel location is not a warranty of a policy, right? It's just like we're being asked, hey, where's this boat likely to spend most of its time? You're cruising, we get it, but the navigation limits of a policy are one of the most important things to note, because a warranty is a legally binding part of that policy. So the navigation limits should be very clearly stated and meet your needs from the date of the quote. It needs to be revised to get it where you want it to be. Navigation limits can be amended during a policy period by mutual agreement between the client and the insurance company, carried out by an agent who's might be asking for a trip to go do the rally or cruise up to the Canadian Maritimes. A very, very inexpensive thing to do. A couple of $100 for most any US company to add navigation for an August trip for a few weeks up to the Canadian Maritimes like Nova Scotia. Most standard US East Coast navigation limits are going to also include the Bahamas, or they're going to be able to add it for very little charge, very easy to do. Most navigation limits warranties, the most advantageous to you, would include what I call is a seasonal restriction that the vessel is required to be, again, warranted. The vessel is warranted north of Cape Hatteras from July 1 to November 1. Every company has a different line in the sand. It might have a different date. They might say June 15th. They might say June 1. And they might be able to make a small change to that if the vessel's broken down, or there's bad weather, or your prop is damaged and you're stuck in Florida. But you really need to make every effort to comply with that and not ever be in violation. And if you ever think you might be, to contact your agent and say, hey, I need to modify my navigation limits. And the same is true for adding the waters of the Caribbean Sea. That is a very big break point. The difference between, again, generically speaking, for the type of boats we're talking about, the difference between having the US East Coast, Florida, and the Bahamas, and adding the waters of the Caribbean Sea can easily be $1,000 to $2,000. And until you have definitive plans of doing such cruising in the Caribbean, don't give the insurance company and us your money, right? Until you know what route you're sailing to the Caribbean and coming back, and who your crew is going to be. This is very important if it's going to be for the offshore voyage. So the note I made to myself here is by only the navigation limits that you require for that policy year. You might be thinking about going to the Caribbean next policy year. And it's worth discussion with a knowledgeable agent about what requirements you might have for the route and the itinerary that you're planning. But really only by the navigation limits that you need. Know what your options are, but don't buy navigation for the Caribbean or transatlantic until those plans are very, very firm. And what do I mean by firm? I'm talking about within 3 months in advance of that voyage starting. There are some exceptions to this. I'm speaking fairly generically, but I think as a general advice, unless the Caribbean is being included at very little or no charge, which is very, very rare, as I just said, you're not going to either be able to get through the underwriting requirements without, and also spending your money for a voyage that you may or may not do. Okay, next point. What can we do? Insure the boat for a realistic fair market value, or even a bit less. Now, the insured value of the boat is normally the purchase price or the survey, a recent survey. And this happens a lot. I'll give you some examples. The client says, I've got a $500,000 Hilux, I'm just making this up, Hilux 54. I bought it 5 years ago for $500,000 and I want to insure it for $750,000. I'm saying, He goes, well, I put $200,000 into the boat. And when was the last time the boat was surveyed? 5 years ago. What do you want to do? I want to go to the Caribbean. Well, my suggestion would be to get a survey. Number one, it's likely to be required on that boat anyway, if it hasn't been surveyed in 5 years, to get a survey and a rig and rigging inspection. And my message to the client would be, let's use a value that's very realistic, and don't try to insure the boat for every dollar you've put into it. At the end of the day, underwriters want to insure for something very close to what they see on Yacht World or what they know from their own experience, right? And the same is also true if someone comes to me and says, well, Morgan, these prices are crazy. How about I take that $500,000 boat and I'll insure it for just $100,000? And underwriters are not going to do that either. They want to ensure that they want the premium to roughly match what a reasonable fair market value can be. Okay. So don't overinsure, don't way underinsure, but be somewhere close to that surveyed value or what you see on Yacht World, because that's what underwriters are going to do too. If they see an aberration, they're probably going to know it. And my own personal viewpoint is, if we know that a boat going to or from the Caribbean and staying, offshore is going to have a rate of 2.5% or percent of the insured value, anywhere between 1.5% to 3%, depending on the age and value, these are big numbers, right? So I would rather personally insure the boat for a little bit less. It keeps my premium down. It keeps my deductibles, especially as a percentage of that value, lower. And this is also based on my own personal belief that the only way you lose on that is in the event of a total loss or constructive total loss of the boat, right? Okay, if that makes sense. Yeah, I was just going to say, ideally, for a boat that's more than 5 years old, I would, if you're going to be doing some offshore voyaging, transoceanic, going to the Caribbean, have a survey done. It's best to come into the insurance marketplace and talk to people like me with your best foot forward, to have organized and thought about some of these things here, to have a fresh survey that's less than a year or two old at most, I think is a good idea. Ideally, you're able to put together some resumes for the core crew. Of course, that might change, but for yourself and for core crew members, ideally this has some, maybe there's a crew of 4 or 5, but at least 2, perhaps 3 have some good prior ocean voyaging experience that has taken them well offshore, maybe done some prior trips to the Caribbean or Bermuda or something like that, right? And finally, I would just say, in terms of timing, know that insurance companies are holding their quotes valid for 30, 60, 90 days. It's important that that once a quote is been released, we can reconfirm it, but it doesn't guarantee that that rate we talked about in January is going to be valid in November, obviously, right? It doesn't mean that that quote is necessarily available or at the same pricing terms and conditions in May. So this also relates to if you have a renewal coming up, or if you're planning a voyage, to maybe do that early on in the process, maybe 3 months in advance of any voyage, of the renewal of that voyage, when you reach out to an agent or two. And I recall in David McKay's article, I hadn't thought about bringing this up, but he said, ideally you're not reaching out to a half a dozen agents. There's only a few companies that are doing some of these extended navigation and voyaging. And that if you find someone that is willing to give you the education and the counsel that you need, and they've got good service, then it just muddies the waters when too many agents are going to the same people. Anyway, that's the end of my prepared remarks, and I am welcome to take any questions.
Okay, well, thank you, Morgan. That's great. So we do have a couple of questions that have already been posted, and we can kind of go back to the top. So I'm going to bring up mine for the first one I raised. because you were talking about lightning and the concern that the underwriters have about it being like the second most expensive claim. Are they making any recommendations on what could be done by the boat owner to help mitigate the impact of lightning besides not being in a storm?
Can I give you a short and direct answer of no?
Yeah.
This has been a really interesting thing to study and to read about. And of course, there's been so many, there is not any solid evidence that there's anything to be done to prevent the severity, other than a highly, I think a monohull sailboat. I just kind of think back to the old Swans, that everything's bonded to the chain plates. The chain plates are bonded to the hull, and there's a huge ground plate on the boat. You don't see that in much. These are in older Swans, and you don't really see that much in modern construction, do we? I don't recall it being that robust where they're using. But no, I don't. No, I'm not hearing any recommendations. Is the direct answer, and it's just a problem in the marketplace. It's how do they deal with it when these claims are, a near strike might only be tens of thousands, but a direct strike is for the types of boats we've been talking about can go 100, 200, 300,000 easy. And these are huge numbers.
Yeah. Okay. That's too bad. The next question was, you were talking about, age of boats. So I guess Brad's got a boat that's 40 years old. His question was, well, what do you see? Do you want to talk a little bit more about older boats, or a bit?
Yeah, if Brad, if we were speaking, I would say, let's say we just met and you're like, hey, I'd like to get a quote. You tell me about the boat. And I'd say, when's the last time you had your survey done? And you might say, oh, I've never had a survey, or something, or I had a survey done a year ago. I put it in the yard. We just did a $200,000 refit, and I had the boat surveyed following the refit. And I'm going to send you a copy by email. And I'm get that, and it's going to say above average this boat, and maybe summarize the scope of the refit. And then, I would say that coverage is readily available. If the boat, I think the hard part is that when someone's buying the project initially, and I had an interesting one where the boat it worked out because the boat was ashore and went into NEB. I'm trying to remember what it was. It was absolutely wonderful. I can't remember what it was right now, but it was in one of these classics. I think it was like from 1974, a Whippy or something like that. It's like I think it was a Whippy 42 or something. And the person went in and they were able to buy it super cheap, and we insured it for his purchase price. But the boat was out of the water and went into the shed for the winter. They replaced, and they just did a full, complete and total refit to the tune of, I forget exactly, $150,000, $200,000 or something like that. And then he had the survey done in May before launching it. And then so that vessel didn't have insurance. It had only had insurance on land, confined to port on land. And then when the underwriters got that survey, which was, it was a beautiful, beautiful boat, really well done, very well executed. And that boat went in the water, and off they went, and insurance was very reasonable.
Okay. Great. I had another question. With the hurricane season appearing to be extending, and we have named storms outside of the season, are they treated the same way, or is it different?
No, I have not seen underwriters change their date. They're typically using November 1 as the end date, and either June 1 or July 1 as the start date for their seasonal restrictions. But any windstorm deductible would still apply outside of those dates, right? So they haven't changed the dates, and the coverage still applies whether it's in season or out of season, right?
So is the term, when you see it in the policy, a named storm, is that kind of the thing that is the trigger that says it's the wind?
Exactly. And it's important that every company we call this a named windstorm deductible. It's usually a separate or it should be right on the quote page. It should be very, very clear that this is a deductible that applies in the event of any claim resulting directly or indirectly from a named storm. Some say numbered, so it could be named or numbered storm as declared by the National Hurricane Center in Coral Gables. So irrespective of when that happens, there's coverage there, but that windstorm deductible is going to apply.
Okay. And Matt had a question about lithium batteries. He's hearing that some carriers are refusing to insure boats that were converted from AGM to lithium.
Yeah, this is not, I know there's been some incidences of fires, and some of them are fairly high profile. But I've not had any companies lay down the law and say that this is something we're not going to do, right? So I don't have any companies that have added any type of anything into their underwriting guidelines or criteria that say that lithium batteries are not acceptable.
Do you think it makes a difference whether they were professionally installed versus you did it yourself?
Yes, yes. And this is another, I would say that, yeah. I mean, I'm speaking maybe not as the insurance side now, which is fairly silent on those guidelines and such, but I think for a lot of major repairs, modifications to modern boats need to be carried out professionally. It just reminds me of, don't let this shock you a little bit, but I've actually seen some claims where boats haven't been winterized professionally. And I've actually seen some endorsements. Don't worry about this now, but I've actually seen some that say that the winterization needs to be completed by professionals as opposed to an owner who's there, like, pouring the antifreeze into the toilet or something. I don't know. I just think that when you get into trying to save a little bit there and do it yourself on some of these issues, you're perhaps best using these yards and have it professionally done.
Okay.
I hate to say that because I'm a do-it-yourselfer and it's just really hard to say that. But
yeah, I suspect many of us are, but at the same time, it's an interesting.
Yeah, I had a friend talk about he had never done any rig work before, but he wanted to replace he had like a camper neck from about 1982 and he's all excited about it. He goes, yeah, I'm going to learn, I'm going to do the rigging. And he said, yeah, I'm going to put in Norseman fittings. And I said, have you ever done that before? And he goes, no, but I'm going to learn. I'm going to watch. I was like, oof, you know what I mean?
All right. Steve had a question. He's got an 84 Bristol 41-1 and he's getting pushback for a different reason, but more about being a liveaboard. What are your suggestions on, liveaboard insurance for liveaboards and coastal cruising? I guess he's also up in the Boston area, so I'm not sure if it's the Boston and the.
There's a double thing there. See, part of the problem is there's some companies, not all, but some companies that require for boats up in New England that these boats are ashore and winterized, right? As opposed to when you get down to the Chesapeake Bay and point south, that you never hear that. It's just, many people keep their boats in the water year round. And many people do up in New England too, I know, but there is that's kind of doubling up with a situation now of liveaboard. And I think maybe underwriter concerns there might be, adding, hot wiring, some heaters, et cetera, et cetera. I don't know. So these underwriting guidelines, I'm trying to think what company that might be. I'm not surprised by it. But I don't think that's, I'm trying to think. It depends on, maybe, yeah. There's very few companies that, if I just took liveaboard as a status, there's really only one company I can think of that won't do that, and that's Progressive. And they don't really do anything beyond 125 miles from the coast anyway, right? But liveaboard, the only resistance I have to that is if that is your only residence, okay? So where you don't have any apartment or, other physical address. For people that are cruising full time, It's never an issue. So there's really, for me, when I ask someone, if someone says, yeah, I'm liveaboard. And so, well, no, I'm just cruising on the boat, 10, 11 months a year, but my home's in Virginia or whatever the case is, that's perfectly fine. Where you do see some resistance in the marketplace is when the person says, this is my sole residence. My address is at the marina. And if it's up in New England, I could see how that could meet some resistance because of that winter period. Markel American, as an example, is really sensitive to boats, even from Jersey on up, that, hey, there's no layup period on this boat. What's going to happen to this boat during the winter? So wish I had better news there.
Okay, the next question was from Lee, and he surprisingly got a quote from his homeowner insurance company, this time State Farm, that was less than, I guess, Geico and Gallery, and with fewer restrictions. Now, can you comment on any thoughts on why this might be?
Well, many of the homeowners policies are ACV policies. We call that actual cash value and I'll come back to that. But that means the definition of ACV, or actual cash value, is replacement cost minus depreciation. Now, with older boats, you're going to see that to some degree, but they're going to actually potentially depreciate that insured value of $100,000. Step by your purchase price, they can add depreciation to that down the line. And I would say that most components of the vessel, an ACV policy, much of the componentry of the boat is going to be depreciated as well. But personally, depending on what the boat is, I have no objection to the, for using companies like State Farm, Nationwide, Allstate for smaller values, perhaps that fall under that 100,000, 150,000. Many of those have limits as to the size that they can do and the values that they can do. But if you're planning on going anywhere, that's where the challenge is. If he has an interest in sailing to Nova Scotia, you'd want to look into that. If an interest in sailing to the Caribbean, ain't gonna happen. Bermuda, no. There probably is an offshore miles limitation that should be clearly stated. I need to be very aware of that, because again, if something happens and you're out of that, you're in breach of warranty of a policy contract. So I think, yeah, I would expect that for certain boats to be less expensive. But if you came to me and you said, I got a $550,000, we'll take that $500,000 Hylas 54, and I want to go, first of all, even if it was just staying at home, so to speak, coastal waters, I would not be using a homeowner's type of policy. And again, bear in mind that many of these boats are built to go places. You're going to want to go places, and you're going to want to be with a company that can do that.
Okay, good. So Richard had a question. His boat's home port is the Great Lakes, and he has coverage for that. I think he's looking for what sort of rates or the type of rider that he would need to do the Caribbean Rally in November to May. So I think that's the idea of, I guess, modifying his policy.
Well, I'd need a lot more information to give any type of budget estimate. If his plan is to, well, I can't really speak to him directly. I would still say that for any boat that is going to spend a policy year that includes the U.S. East Coast, offshore waters to the Caribbean, cruising the Caribbean, and then returning back, depending on what that is. If it's a $700,000 boat, the rate could be 1.5. If it's a $300,000 boat, that rate could be 2.2. If it's a $150,000 boat, that rate could push 3% of the insured value. Okay, that just gives you a rough, very, very rough feeling for it. But I'd need a lot more information to go beyond that.
Okay.
In other words, in that instance, the Great Lakes is a great starting location. If I'm rating that just that boat there, and it needed just full U.S. East Coast. But what's sitting on top of that is, hey, we're sailing offshore to and from the Caribbean, and that's what's got it kind of negates the benefit of being a Great Lakes boat, right?
Yeah. Okay, before I ask the next question, if folks have specific questions for you, can they email you and,
Sure.
reach out to you
Or
directly?
call me, email or call, yeah.
Okay, great. Okay, I had another question. So you talked earlier about maybe defining your cruising a bit more specifically when you set your policy up, but then discuss possibly modifying the navigation limits for specific voyages. Does that become, is it more cost effective to do it that way than to, have the broader range for the whole season? When is there a break even, a point when?
No, if it's done as a trip endorsement, the answer is no. It's not necessarily, often, like a trip to the Caribbean and back via is going to be written as a trip endorsement. So it's going to be a flat, fully earned. That means there's non-refundable charge. The same with the trip to Nova Scotia. Like I have navigation limits from Eastport, Maine to Cedar Key, Florida and the Bahamas. But hey, this summer I want to go up to Nova Scotia, and the underwriter, and you call the agent, the company says, well, we want $250 for your 3 weeks up in Nova Scotia. And there's no benefit in that. They're going to write a trip endorsement that is date specific anyway. A Caribbean trip might be on or after November 1, voyage to the Caribbean, returning no later than June 1 or something like that. So generally speaking, there's no real dollar saving. It's just a lot easier to underwrite when your route and itinerary, which are like in resumes, which may well be required, are known, right? You need to know if the company can provide it and at least get a reasonable budget figure. Hey, can they provide it? And what's it likely to cost? And what does the insurance company want from me when I request it? Oh, they want this trip questionnaire form, or they want resumes, or they want a survey not older than 5 years or 2 years, or whatever it is. Those are the things you want to know in advance.
Okay. What if, so you're in the Caribbean until June 1st, that's what the policy says. But now you find because of COVID, whatever, you're stuck there longer. What happens then?
Well, there's two ways this works. One is that if a person, and this happens all the time, someone comes to me and say, hey, Morgan, I want to stay I'm going to sail to the Caribbean, but we want to stay there for a year or two. And we're going to keep the boat down in Grenada. And we may haul it at Spice Island Marine for July to October. We may use it some, whatever that is. Then I know that there's about one insurance company I can go to, and that's Concept, and they will write that business. And the premiums push closer to that 3% mark, and it's a little bit on the higher end. So if we know it in advance, it just steers me directly to the one company that can do that, because none of the Chubbs and Travelers, Hanovers, all these big American insurance providers are not going to be providing. They will not agree to provide coverage for boats that are staying in the Caribbean, even if the boat is south of 12 degrees 40 minutes, down in the ABCs or down in Grenada. They're just not going to do it. So if I know that in advance, easy enough. But you're absolutely right. We have people who didn't plan on that, but they get down there for whatever reason, COVID or whatever else, say, hey, we're stuck in Grenada. We're stuck in so-and-so. And then we're in a position where ideally we know that well before the seasonal restriction date, which could be June 1 or July 1, to get back, back to the States north of Florida or north of Hatteras. And the person's ideally come to me sometime in April or May and say, Morgan, guess what? We've decided we have to stay here. We want to stay here. And then we're going to obtain a quote for a new policy. And when that new policy is placed, then that existing policy would be canceled, and any amount of premium that's unused would be refunded, typically prorated without penalty. Not always, but a great question. Happens all the time.
Yeah, Joe had a question. What's the market saying about double handing? Because we've got, there are a number of experienced couples, or maybe not so experienced couples, that are sailing that way.
Well, the market's not fond of it. You're probably aware that there is a product that is limited to just Gowrie, and that's the Markel American Jackline Insurance Program, which was formed by Al Golden 30 years ago. probably. And that was a program that was originally designed for double-handed sailors. I don't know, that program is, again, it's only accessed through Gowrie. They're very silent on, and it's underwritten by Markel American, by the way. I don't know what their capabilities are. I'm not hearing much about them. I would imagine, in knowing how Markel has been, just like every other insurance company, that they're probably pulled in their horns a lot as to what they underwrite. As you know, a few years back, Markel American decided they weren't going to insure multi-hulls anymore. Now, whether they do or don't in that Jackline program, I can't comment on that. I just don't know. But double handing is that's probably the only source I know of. But generally, for an ocean voyage, this is not an issue for boats that are, let's say, traveling inside of 250 miles. I'm just saying generically. So you're cruising the US East Coast, Bahamas, double handing is just fine, okay? No issues. It's when we're asking for a voyage of transatlantic, or we're sailing to the Caribbean, we're sailing to Bermuda, and I want to do that double-handed. That's very difficult. This is crazy. I don't have any companies that are willing to do that right now. Even, I mentioned what's going on with Lloyd's and the whole bit, and I've seen this too. And you're double handing and one person's sick, or my dad got his hand cut in the windlass one time. So my mom's single handing a Swan 53 to get it back to La Paz in Mexico, and it's blowing about freaking 35 out of the Northwest. Nothing happened. They were all good, but it took, other people to help them when they got to the dock, I can assure you. I had a client with a Katana in the South Pacific, same situation, just the two of them. He said, and he actually wrote it to me, and I just said, and he was honest, he just said, hey, I was exhausted. We've been up for days. We found ourselves on this reef. We couldn't get it off. Any type of resources for trying to save the vessel were a couple 100 miles away. We just got off the boat, and the boat was destroyed by the surf on the reef. Didn't really need to happen. I don't know. I saw someone just blinked up there about single handing. Again, the market's largely silent on that issue for coastal cruising, but I'm going to add an important caveat. Every yacht insurance policy out there has a seaworthiness requirement. And that does not just mean the seaworthiness of the boat, but an owner, the skipper, the captain has an obligation to keep that boat seaworthy by keeping it properly manned or crewed. The word manned, it's not right anymore, but properly crewed for its intended voyage, for its intended navigation under the reasonable forecast, weather. So single handing is almost in a breach of the seaworthiness. It's one thing if you're out sunrise to sunset, or you're doing a quick trip or something, you're going to the fuel dock, okay, fine. Forecast winds are 15 or less or whatever. When people come to me and we're doing, Newport, Bermuda, the double-handed race, we're single-handed, and we want to go to Bermuda, we want to go to the Caribbean. It's just not a market there is no market that I know of for single-handed.
Okay, it's quite a challenge.
Yeah.
So what does the market look like for a new boat? Do you still have to do a survey, after you've done your commissioning?
Negative. No, surveys, it depends on what you're doing. If you're going to be doing some ocean voyaging, the first survey is not normally required until that boat is turning into age 5. But for many insurance companies, for a reasonably, valued boat, I would say that the first survey might not be required to age 15 or 20. But again, if you're doing any voyaging, get it done. That steps up that to, having a survey at age 5, and that survey should be less than 2 years of age.
All right. So Corbett had a question. He's got a tough experience. He's had an insurance company, I guess it's Triton, refused to insure a Shannon 38, which is an above average condition. And I guess, let's see, above average condition for the fair market value shown on the survey, less than a year old. they're only insuring for the price paid. Is this crazy, something to be expected? What's your experience?
Well, yeah, purchase price, but most underwriters should be willing to consider substantiation, some documentation of the capital improvements done to the boat. You can't just have a list and say, oh, it's not a dollar for dollar thing. You might have a list and you think, well, I bought new sails, I bought new rigging. Well, these things should have, you know what I mean? But capital improvements, underwriters will try to meet you part way. And I would say if they won't, find a different insurance company or have a valuation, maybe the same surveyor can come out to the boat and just do a valuation statement, not a full-blown survey, but say, I surveyed this boat at purchase and I have now come back and I believe that a reasonable fair market value now is X, right? So there's some ways around that. But don't expect that every dollar that you put into the boat will transfer or correlate to a dollar for dollar increase in the insured value. It's tough to do.
Okay. Another new boat related question. So John's having a new boat built in Vietnam and they plan to sail in Southeast Asia and Australia. You have any advice for them on how they go about, I guess, approaching insurance for that?
Well, perhaps the market will change. One thing I didn't comment on is that the market for the South Pacific and Southeast Asia, where I used to write so much of that business, has been almost impossible to underwrite lately. Maybe the Markel Jackline program would do it, but there's a caveat. If you're in Australia, Queensland particularly has a requirement for 10 million Aussie dollars of pollution liability coverage, which is really, I know Markel won't do that, and it's created problems for us before. London used to just like, oh yeah, we'll do that, no problem. Lloyd's, that is. What tends to happen there is I just had a client who's in Australia, and I referred him to contact Pantaenius Australia. Getting that boat insured locally worked out better for him. I have hopes. I don't know when this new build happens. There's a facility out in Lloyd's that's called the Global Yacht Cover. It's been around since the early 1990s, and he's one of the best at writing insurance for the far sides of the world. I have a hope he'll come back into the market for U.S. owners and U.S. vessels. But right now they have the spigot turned off right now. That began just right around when COVID happened. Everybody just kind of went, stop. Yeah. A lot of boats couldn't get there anyway.
Okay. Brad had a question about, similar to, I guess, the one I asked earlier about voyage specific endorsements. Brad, are you happy with what you heard, or do you have any more that you want to expanded on that? Just put that in the chat. And while you're thinking about that, so is there a magic number as to the distance offshore before the policy suddenly gets more expensive? You've mentioned 250.
Yeah, I've mentioned that before. But I have to caution again. I mentioned that caveat earlier. We're talking about a world of, many different insurance companies that are changing things all the time as well. You want to refer to the language in the policy. It may be included in the definition section. It may be stated very clearly on the quote. Normally, an offshore miles limitation would be stated very, very clearly on the quote. Not more than 100 miles offshore. I think the KEMA policy is not more than 300. Concept is not more than 250. But there's a wonderful wording that a lot of American companies use, like Chubb and Travelers. They use the word coastwise waters of the U.S. East Coast from Eastport, Maine to Cedar Key, Florida, and the Bahamas. And that would provide coverage unless there's here's what I want to say. Unless there's an offshore miles limitation stated on the quote and or policy, then it is up to the skipper of the vessel to sail the most prudent route for the safety of the vessel and its crew within those port to port, within those permitted navigation limits. If you're headed to Bermuda, you're out of navigation, but those Eastport, Maine to Cedar Key, Florida, and the Bahamas, you may decide, I want to get to the other side of the Gulf Stream because of weather or routing or whatever. It's the best thing for me and the crew, that I need to get a couple. So you would be covered under that coastwise definition for sailing the most prudent route, say from Florida up to Maine, and you may be 300 miles offshore, 200 miles offshore. That's a very unique situation. This is where the devil's in the details of the policy in the quote. I ran into this, when I think I ran into this a lot when the trip from Hampton to the Bahamas were added. And I worried about a lot of people out there not paying it, and agents too, not recognizing this, that if I'm following that route at a certain point, probably off of South Carolina or Georgia, I'm more than 300 miles offshore. So if there is an offshore miles limitation as a State Farm or Progressive or Kima or Geico or something like that, you may be in breach just when you need it. Right? You breach your policy navigation limits. So that's a really important detail to focus on. And there's no direct answer I can give you, but I would say that it's specific to the policy. I generally use 250 as a kind of pushing that out somewhere a little bit, because when someone is going to be doing that, normally they're doing an offshore voyage, and that's when that's why I want to get more information so I can make sure that the policy that I'm quoting is going to meet their needs for what they need.
Great. So Clark has kind of a follow-up on that. Is coastwise the same as coastal waters, or?
I like the word coastwise better, but if the word coastal is used and it's not defined in the policy, and there is no mileage limitation defined in the policy or on the quote, then I would say that the same rule of the prudent mariner making the judgment to sail the safest route for the vessel and the crew to get from point A to point B within those policy navigation limits. So I think coastal would be fine. Unless they say, define it as, the Hague line or not more than 100 miles or something like that. Lacking a definition, I think it's very safe that you're sailing the most prudent route for the safety of the vessel and its crew. And I just happened to have been more, 150 miles offshore or whatever it was, because I wanted to sail from Cape Henry to Provincetown, Massachusetts. And I wanted to leave. I wasn't going to stop in Block Island, and I wasn't going to stop in Martha's Vineyard. I just wanted to sail Rum Line and be a little further offshore for some weather. I wanted to catch it, I don't know, whatever it may be.
Okay.
Catch some days off the Gulf Stream. I don't know.
Looks like we might have lost Alex there.
So
but
I
didn't
have
see any
insurance-
Oh,
This is mine. This is my last question. So if there's no named wind event and boats are dragging anchor, and maybe it's because somebody didn't have enough scope out, do the insurance companies get into an argument about that, or do they just kind of?
Oh, wow. Saving the most challenging questions. If there was a wind event, a squall goes through a thunderstorm and it blows 40 out of the northwest or something, and a whole bunch of boats start dragging, that's very clearly an act of God, okay? And that everybody takes care of their own damages, themselves, right? I can't say that boat dragged on me in an event like that. It was an act of God, be it a squall, a storm, or a hurricane. But if the weather conditions are completely benign, that's a very different situation. And it could well be that the other vessel was negligent and did fail to keep a watch, was not properly lit, didn't have the scope, but whatever it was, and they may have caused damage to your boat or other boats. Then I think that's likely that the insurance company may try to subrogate against the other party, the third parties, both who dragged. They're not obligated to, and they might not do it in a very small claim, right? If there's only, a couple $1,000s of damage, they're not gonna they're not gonna fight over something like that. If the boat, if there was a claim that was far more significant, I would expect that underwriters would get involved. The best thing you can do if something like that happens, I wish I could tell everybody this, because it happens to all of us, it seems. Someone drags, no matter what it is, get your camera out, get written testimony. Just like you would with an automobile accident, you want to sit and have a discussion. Do not assume liability. Do not discuss it. Exchange information, name, address, maybe a copy of the insurance policy as much as you can get. Hopefully everybody's being cooperative and being big boys and girls about it. And then report the who, what, where, and when, just the facts. What happened is if you were writing in your logbook, and notify any local authorities, be it the harbor master, harbor patrol, US Coast Guard, any witnesses on other boats or on shore. So you carefully note the weather conditions, the time, the date, keep it, just stick to the facts. Who, what, when, and where, and what happened, okay? That's always my best advice when these things happen.
Okay. Any other questions from anyone? This has been really, I know for me, it's been very, very helpful. I hope it's been helpful for others. If not, Barb, why don't we wrap it up and then we can open the chat or open people's audio and video.